Good morning, everyone. It's Jared here from the Alpha Capital Trading Group. So just to get a quick run through for the week ahead, obviously I know we've had a lot of volatility in a lot of the different financial markets over the last 2-3 weeks or so since the beginning of the year, and we saw that reciprocated back in yesterday into the stock markets for the beginning of this week. Now, in terms of the key events that I'm kind of focused on this week, as a preview. Today, we obviously have the figures associated to the housing price index and the Schiller index in America, which will be kind of the one big thing that I'll be looking at today. But more specifically, over the course of the week, tomorrow will be the busiest day of the week, in my opinion. Now, we do have the Bank of Canada interest rate decision at 3 o'clock tomorrow, with the monetary policy report and press conference to follow as well. And tomorrow evening at 7 p.m, we have the Federal Open Market Committee policy statement with rate decision and press conference to follow as well at 7:30. So we do expect this to be tomorrow to be the busiest day of the week, absolutely, without a shadow of a doubt. And I suppose all attention turns in the financial markets to see how does Chair Powell in the Fed navigate around what's been a very, very bearish January for the stock markets and for the financial markets overall this year, and been able to, I suppose, set a course of action for the coming year ahead. Now, projections are stating that the Fed will raise rates approximately 4 times, potentially maybe a little bit more during the course of 2022. And I suppose for the financial markets, they're looking for a more update from Fed Chair Powell on when this will look to begin. Now, in my opinion, with the sell-off that's taken place over the last number of weeks, it's important to see how does Chair Powell navigate around this, particularly with his Q&A press conference, but also seeing can he keep the markets afloat after what's been a very, very turbulent 3 weeks or so. So I suppose from our perspective, we'll be watching this very, very closely to see, one, is there any sort of material change to the taper discussion, but also as well, is there any further insights as to when the Fed will begin to raise rates? If there is any sort of meaningful rate tomorrow, like change in terms of an increase, that could have a significant onset on the indices and the stock markets particularly. So I think what will actually happen is Fed Chair will try and kick the can down the road for as long as possible until he can't no longer. And then they'll be in a position then to raise the rates accordingly. So if we look at the week ahead, obviously Tuesday, Wednesday, Thursday tends to be the busiest days as in a kind of normal sense. And we don't expect that to be any different this week, with Wednesday being the bigger day with the FOMC meetings and Bank of Canada meetings as a result. In Thursday, we do have kind of shorter term data with GDP coming out. We also have consumer confidence surveys, and we have the weekly jobless claims in the US at 1:30 p.m. on Thursday. So they're kind of the primary events that I'm kind of focused on this week as we look at the calendar over the next couple of days. And I suppose when we apply that then into the stock markets, if we take a quick look at the US-based indices and just the dollar, just to give a quick preview for the week ahead, we can see overall that the indices since the beginning of the year has all sold off very, very significantly. Now, without applying any sort of material bias, we can obviously see a sharp pullback yesterday off those lows at 33,200 on the Dow Jones, 33,600, and the price action did close above 34,000. So we got a strong recovery or strong relief rally yesterday in the indices, particularly on the Dow Jones. Now, again, similar scenario. If we look at the S&Ps, we can see here how the price action came down to 4,300. We did see material bounce. So it'll be all eyes now again, as we've alluded to there on Wednesday evening, to see how does the markets react around this FOMC press conference, to see is there any sort of material changes, because these fundamental narratives and this fundamental news will affect and impact upon the market. So it's important to do your research, look at what the key components are, what is the key scenarios that can or could take place, and then being able to, I suppose, associate that into a clear trading plan as well for tomorrow's press conference. So it's important to keep an eye on that. Last but not least, if we look at the NASDAQ, we can see the NASDAQ has come off massively during the course of the first 3 weeks as well. 16,600, 650 area has been completely taken out. Price action has continued to sell off. And at one point yesterday, we were trading over 2,500 points of the yearly highs. So you also have to take into consideration that at the moment we're in a corrective phase. Okay, if you look at any of the indices, we're kind of down anywhere between kind of 8 to 10%. We were down 10.5% yesterday, but obviously the lows have been pared back a little bit, reducing the deficit somewhat. Now, the way I would see it, if you're reading any narratives and you see bear market territory, it's important to take into consideration that a bear market is only factored in after a kind of an 18 to 20% correction. Okay, after an 18 to 20% decline, that is when a bear market is formalized. Other than that, then you're still in a corrective phase. Okay, you've got 5 to 8% is a dip, 8 to kind of 12, 15% is a correction. You're kind of 17, 18% into your 20% is a bear market territory, and anything kind of above kind of 35, 40, 45%, then you're looking at a stock market crash. So just to give yourself some sort of understanding as to what the terminology is applied to certain declines in the stock markets. Okay, and as we know, bull markets will go up gradually, bear markets will occur very, very quickly. So it's important to keep an eye on the price action into the end of the month in particular to see, does some of these lows be pared back and does the market stabilize? Now, last but not least, as we look at the dollar, we can see that the dollar in recent weeks has picked up steam again off the back of the weaker stock market. So as you'll know, with the way the markets work, everything is interlinked, okay, which is obviously very, very important. And as we can see, the markets moving out of the riskier assets like your cryptocurrencies, like your stocks, like your equities, like your indices, your ETFs, all we can see now is there's a migration back into the safer havens, which is your bonds, which is your dollar currency and your safe havens. Okay. And as a result, we can see that the price action here in the dollar is trying to break through the 96 level again. So I suppose all eyes this week, does the price action break through 96, 97 levels up here to continue progressing higher from an analytical perspective? Okay. So all eyes, I'll be paying very, very close attention to the FOMC on Wednesday for kind of a deeper understanding as to what the next phase for the next phase of, I suppose, not just price action, but in terms of strategy by the FOMC going forward for 2022. Thank you very much, everyone, and I will be back later in the week for another update.